Growthpoint Properties will be the first property company to take up a secondary listing on the stock exchange A2X while keeping its primary listing on the JSE. Joining us to talk about the rationale around the decision and the opportunities it will present is Lauren Turner, who is Head of Investor Relations at Growthpoint, and Kevin Brady, CEO of A2X. Good afternoon. Lauren, I'd like to begin with you, as you guys were the decision makers. Why A2X? I mean, ZARX is also there as an alternative, and even the JSE itself. Why A2X?
So we see it very much as complementary to our JSE listing. Kevin can allude more to the detail, but A2X is essentially an additional trading platform where your shares can trade. So the primary regulation remains with the JSE, whereas now we're giving our investors an option as to where they should or could trade, essentially. The benefit with A2X is obviously the lower trading fees, which we find attractive. We took quite a while to make the decision. We canvassed all participants. The brokers, they've managed to attract the top brokers to trade on A2X. They obviously need product, so it makes sense for us to go there. And ultimately, our investors also want the option to trade where it makes the best sense for them and where they can get best execution. And obviously, price is a big factor. Even if you look at the new European standards, MiFID, which was recently introduced, brokers and investors are forced to look for best execution for their clients. So it's really in line with global best practice, and we like to be part of developing the local financial markets.
Kevin, how much more, can I say cheaper or attractive perhaps? Sure. Attractive are your prices compared with the JSE that's alluring now the 10th company to come and find a second home in you?
So there's two sides to it. One is, what does it cost a secondary list? There's no cost, there's no risk, there's no additional regulatory responsibility, so there's no downside. In terms of what is the appeal, so we've reduced our prices by in excess of 50%. So on the normal cost of the end-to-end cost of a trade, we are 50% cheaper than the JSE. Now, that has a huge benefit. One, obviously brokers can save money, but what we found and what we've seen internationally, and we're seeing the same thing here, is by reducing the cost of doing business, you start getting a better quality market. And you start getting bids and offers that actually become narrower. And that has a huge benefit for the end investor. In fact, we were talking about it earlier, it's upward of R1 billion a year. Now, we're in the early stages of that, but if we can get the critical mass, 20–25%, there are huge savings for this industry.
Anything up the pipeline in the short term about increasing that critical mass?
So in terms of from an issuer perspective, yes, we have a lot of potential in the pipeline, and there's no doubt that Growthpoint's listing today is a great catalyst to help bring some more onto our platform. Look, you never know until the documents are signed, but there's no doubt we're seeing a much more positive attitude to what we're doing.
In the property space?
Right across all the sectors. So we definitely see it. Our biggest challenge actually has just really been around education, because we've only ever known one market. Now you've got two markets, people need to understand how it works. And we understand, so part of our process is educating them, getting them over the line in terms of the benefits, and yeah, we're seeing the momentum, we're hugely excited.